Hey everybody, Cameron here. Welcome to the April 2023 market update. We're going to walk through just some general trends on what's happening in the market today. We are going to get into some specifics here in Phoenix, but I do want to kind of walk through some data points and see what we can come up with for some explanations about what's going on here. There's a lot of questions around, specifically, what is happening with home prices? So I think part of this is to get back to kind of an inflection point in the market recently, which was the fall of 2022. Here's some of the headlines that were hitting us at that time. Housing prices could plunge 20% in Dallas, 210 US housing markets at risk of 15 to 20% declines. That was from Moody's. US home prices, this is Money Watch, that could fall as much as 20%. Pretty doom and gloom. Of course, listen, I'm not saying that hindsight's 2020 and you were not able to kind of obviously see the future here back in the fall of 2022, but let's talk about the realities of what has happened. And year over year, January to January, we have seen most of the largest cities in the country have seen an increase, and the ones that haven't are out on the West Coast. A lot of tech sector areas that have struggled, and the rest of the country hasn't. And nationally, we've seen a 3.8 increase year over year. So that's accounting for the run up that we saw from January through middle of the year last year, including the drop, because there was a drop from, depending on where you were at in the country, from the summer to early fall, late summer, early fall timeframe through the end of the year, there was a significant correction that we could see now in hindsight. And so those headlines and predictions were, obviously trying, I think, to sensationalize the situation a little bit. We were coming off of one of the most white hot markets we have seen in decades. Interest rates were starting to get out of control. Inventory was down. I mean, look, the predictions were pretty bold, I still think, at that time, but not completely unwarranted. And you can see by where we've seen that change in the turmoil of all of that up and down, we're still up nationally. And for us here in Phoenix, pretty flat year over year, January through January. CoreLogic, declines in the West are due to the tech industry slowdown and a severe lack of affordability for decades of undersupply. So this wasn't something that was, isolated to those West Coast, markets just in the last recent period here. This is something systemic that they've been dealing with for a very long time. And with the VC withdrawal for a lot of the tech industry, where they're not there, a lot of the investors are pulling out of those companies and really just focusing on the ones that they're seeing, kind of responsible risk with, if you will. That's a big piece of what's happening out west. But you can see across the country, generally, we have a really high rate, and this is the rate of appreciation. So not just the year over year, but how quickly homes are appreciating. Mountain, where we are, is a little flat. I think that's coming into the idea that we've seen some of the largest, Phoenix specifically has seen some of the largest growth in population relative to the rest of the country. And with that, we're seeing some stagnation on our prices. We're also seeing some stagnation on our inventory. In fact, we're seeing a drop in inventory. So it's definitely something that we're going to keep an eye on. But these are, what we're seeing year over year. The home price. So we were looking at year over year. Now let's look at month over month. So, going from January into February of this year, Case-Shiller is showing, fairly moderate, kind of flattening of the market. So we're not seeing this volatility that we were seeing running into the latter part of 2022. So you could look at these numbers, January through February, February through March, and what we're seeing is this stability in the market. Not a whole. I mean, Denver looks like, Seattle might have seen some of the biggest declines at 1% and 1.5% respectively, but Everything else is less than, a third on a change on the upside for some of those markets on the top left there. So point here being is that we are seeing a stabilization, excuse me. This is also broken down by region. We can see that some of these regions, New England, we were seeing Boston and some of these other charts is pretty high up, which is most of New England. But we're seeing, over in the Pacific and the mountain, and then east, south, central, which would be, probably Texas and such, as some markets that have constricted just a little bit month over month. But again, the point there is that it's just a little bit. And this, I think these two sources, Case-Shiller and FHFA, are really these 1 year perspectives on exactly month over month change in home values, really summarizes the whole situation, because we saw, again, the front load of 2022 being kind of, fairly egregiously out of control, although coming to an end at some point in the middle of the year, June, July timeframe. We saw that rather significant dip in the latter part of the summer and in through the end of the year. And then we're seeing this kind of moderation of pricing, not declining, not increasing at a fairly high pace. So, Black Knight, February Monthly Mortgage Monitor, all-in home prices nationally are down 2.6 from their peak in 2022. This is Moody's. Repeat sales are down 2% from their peak last July. This is Freddie Mac. Home price index is down 2.5 from its June 2022 peak. So again, kind of showing, back to that first slide, we're not seeing this free fall on pricing. It's not 20%, and nobody really, because if you think about it, one of the biggest factors that initiated the slowdown to begin with and was breeding a lot of fear into the industry, ourselves as agents and brokers, lenders, and of course the buyers, the builders, was the interest rates. That was the big fear, is that these rates were going to continue to balloon out of control, and that we were just going to see this continual downward trend. This is local data here in Phoenix from the Cromford report, and you can see going back to more or less the kind of start of the pandemic crazy run-up years, where we were seeing, these were on a weekly basis, these were the number of accepted contracts just locally here in the Phoenix market. And if you look kind of from left to right, really high numbers, peaked in the kind of latter part of 2020, down a little bit for the holidays, back up for most of 2021, down for the holidays, back up for 2022. And we see this gradual decline until we get to the end of 2022. And then we see this kind of seasonal spike as we've seen in the previous years, albeit slightly lower than the previous years, but it is sustaining. And you can actually see the tail end of that is starting to creep up again at the number of contracts that we are accepting on a weekly basis. The problem with this, or the challenge and the fear of this, is that the inventory continues to drop. And I'll demonstrate that in another slide here. We're also seeing a somewhat flattening of the median days on market. So this is the number of days on median, not average, but the median number of days that a home, now I filtered this down to single family homes between 250 and 700,000, kind of the meat of the market, not foreclosures, not short sales, just, regular transactions, single family home transactions. I took condos out of it, but you can see, again, same time frame, kind of that going, 2.5 years back, or excuse me, 3.5 years back, where the inventories and the days on market were incredibly constricted. The end of last year, everything kind of spiked up, and it took a significant drop at the beginning of this year. And we're starting to see the trend somewhat, soften a little bit. It's not as dramatic, going down on the latter side of this graph. And average list price per square foot at contract acceptance. So basically price per square foot, we saw a similar, the craziness, the run up, you hit kind of mid 2022, tapers off and starts to come down. And it took that dip at the end of last year, and we're starting to see that kind of consistency and stability. And the irony of all of this is that that's what we've wanted for so long, is we've wanted this consistency in the market. We don't like the unpredictability aspect of things, both as an agent, but of course as consumers, because it affects our confidence. And if we're doubting what the market is doing, then we're gonna contract ourselves from any kind of situation, unless it's kind of you have to move, you're obligated to move for some reason in your personal life. And so I think the point here is that we're seeing a stabilization. I thought I had a graph in here on interest rates, which I don't think I do. We're seeing a stabilization on interest rates. We're seeing a stabilization on price per square foot. We're seeing a stabilization on months of supply, supply and demand, which is the last slide I'm going to show you here. I was talking about Cromford reporting. So here's their index and supply index, and kind of the correlation that they have with each other. And just this goes back over 20 years, and it's the red line is the demand and the blue line is the supply. And we've known for a very, very long time that our supply has been gradually going down, 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 and down. And of course, it spiked up at the end of last year because people had a lack of confidence. And so the demand was starting to wane at that time as well. And you can see right about 100 on the index is normal. Well, we're still below normal, but look at what is happening at the very, very last kind of small portion of this chart right here on the right. Is the supply spiked, and now it is starting to come way, way back down, and the demand dropped, and it is starting to come back up. And so once we see this inversion of demand going up and supply going down, what is going to happen to prices? It's the whole point of this market update. The answer is they will likely go up. Now, of course, I'm not making any assertions. I'm not saying prices are going to skyrocket. In fact, we're seeing in some segments they are still compressed. We're seeing in some zip codes in some parts of the valley here locally in Phoenix where they are flat or slightly declining. You saw in some of these other kind of national perspectives, Phoenix and the mountain region, we're seeing flat or maybe even some negative pricing. So sure, they might continue to drop 0.2% month over month, or between now and the end of the year, another 2%. Is that enough for you to stop your consideration to pull back and retract from the market because you think a 2% drop in price is going to affect your overall well-being financially? Maybe the answer is yes. And respectfully, that's fine. We're here, we're not going anywhere. So anyways, coming to the end here, just appreciate everybody's attention on this. This was a quick one. Just wanted to get it out there and show some data points and really address some of this concern that we're seeing with prices coming down, and we're just not, at least to the velocity in which a lot of people were predicting that we might have just a few months ago. So please like the video. Don't forget to subscribe. This is how we keep things going, and the more people that are watching and paying attention, the better for you and us. It helps us create more video and content. So thank you very much, and have a great day.